Hey everyone, welcome back to Corporate Dakota, the place where we find the hidden stories in financial reports. In this video, we'll be diving into Relativity Acquisition Corp's financial report for the quarter ending June 30, 2025. It's not exactly a thriller minute, but there are some interesting bits if you know where to look. Before we get into the nitty-gritty, if you're tired of corporate jargon and want clear, no-nonsense analysis, hit that subscribe button. And if you love digging deeper into company financials, come join our Discord community. You'll find the link in the description. Alright, so this filing is an amendment to a previous report, mainly to fix some paperwork on the officer certifications. Nothing earth-shattering there, but it does tell us this company is still in its early stages trying to get its house in order. This is Relativity Acquisition Corp. They're what's called a SPAC, a Special Purpose Acquisition Company. Basically, they raise money from the public with the sole goal of finding another real company to buy or merge with. They've got a deadline to do this, and if they don't, they usually have to give the money back. Let's jump straight into the numbers. If we look at their balance sheet, it paints a pretty typical picture for a shell company like this. They have some cash, most of it sitting safely in a trust account, and very little else. That trust account balance is about $782,875 as of June 30, 2025. That's the money they raise from investors to actually buy a company. Their total liabilities are around $3.2 million. Now that might sound like a lot, but for a SPAC that has to find a business to buy or go belly up, it's not entirely unexpected. The company currently has an accumulated deficit of over $3.1 million. This just means they've spent more money than they brought in from operations, which is pretty standard for a company that hasn't actually started operating yet. Now let's look at how they're spending money, or in this case, losing money. Their general and administrative expenses for the 3 months ending June 30, 2025 were about $190,080. For the same period in 2024, it was a bit less, around $119,047. This increase is probably due to the ongoing search for a business combination. Here's an interesting one, the change in fair value of their warrant liabilities. For the 3 months ending June 30, 2025, this was a gain of about $40,570, but in the same period last year, it was a loss of almost $177,000. This number can fluctuate a lot, and it reflects how the market perceives the value of their outstanding warrants, which are essentially options to buy their stock. Overall, for the 3 months ending June 30, 2025, they reported a net loss of around $188 compared to a larger net loss of about $22,398 for the same period in 2024. And per share, their net loss is pretty consistent, about 3 cents per share for the Class A common stock that might have to be redeemed. Looking at cash flow, it's mostly about maintaining operations and managing the trust account. They used about $309,863 in cash from operating activities for the first 6 months of 2025. That's significantly more than the roughly $108,871 they used in the same period of 2024. Again, this likely reflects the costs associated with searching for a business to acquire. Then here's where they spent some cash from their main pot, the trust account. About $9,266 was withdrawn in connection with redemptions in the first 6 months of 2025. This happens when shareholders decide to cash out their shares before a business combination. On the financing side, they received about $325,000 in proceeds from a promissory note from related parties in the first 6 months of 2025. This is basically borrowed money to keep the lights on while they look for a deal. So as their own report says, they're a blank check company formed to merge with businesses up until they actually acquire something. Their main activities are setting up the company, doing the initial public offering, and looking for that acquisition target. They don't make any regular business revenue yet. Now the big news here seems to be the proposed business combination with Instinct Brothers Co. Limited. They signed an agreement back in February 2025. This is their current shot at actually becoming a real operating company. The deal involves exchanging shares and contributing ownership interests. It's important to note they've had to extend their deadline to complete this combination multiple times, and they've used up a good chunk of their initial investor base through redemptions along the way. They are currently aiming for February 2026 to get this done. The core of their financial story so far is the net loss. For the first half of 2025, it was almost $600,000. This is expected for a SPAC, as their expenses usually involve administrative costs, legal fees, and the costs of finding and executing that all-important merger. The fair value of warrants is a critical accounting estimate for them because they're classified as liabilities. This means fluctuations in their market value directly impact the reported profit or loss each quarter. It feels like Relativity Corp is in a bit of a race against time. They've kept the lights on with a mix of sponsor loans and by successfully extending their deadline to find a merger target. The main risk for them, as with most SPACs, is failing to find and close a deal before their deadline. If that happens, investors could get their money back. But the company itself would likely cease to exist. The proposed deal with Instinct Brothers Co. Limited is their current path forward, but the success of that hinges on many factors, including regulatory approvals and investor sentiment. Without a successful business combination, their accumulated deficits and cash burn will eventually lead to their dissolution. That's our look at Relativity Acquisition Corp's financial picture. What do you think about their strategy and their chances of success with this Instinct Brothers deal? Let me know in the comments below. If you found this breakdown helpful, give us a like and subscribe for more corporate deep dives. And don't forget to join our Discord community for more insights and discussions. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.